We have worked together on many initiatives of government together. We have also had, quite interestingly, very serious differences of opinion on number of issues. Once he came when I was Secretary Economic Affairs and he was Secretary DIPP, he came to my room in a very agitated mood because we had not agreed to something which he had proposed. So he came to my room very angry and he was ready to pick up a fight with me. So I had to cool him down, make him sit, and anyway, that is another story. So it's a 50 years friendship going back to college days, going back to the service. He has already mentioned he was in Kerala, I was in Tamil Nadu, and also in the government, especially when he was secretary in the Department of Industrial Policy and Promotion, and I was initially Revenue Secretary, and then went on to become Economic Affairs Secretary. We had a lot of things to do together. I remember when I was Revenue Secretary and Amitabh was in the DIPP, we started this, correcting this whole process of removing inverted duty structure to make Indian products more competitive. In DEA, we also worked together on number of things, starting from, on ease of doing business, on liberalizing the FDI reforms. I remember in November 2015 and again sometime in 2016, he and we worked together, we sat down and we discussed a big liberalization of the FDI regime in India. After we had completed our discussions, we escalated it to the ministerial level and further up, and the decision by the government was taken. I think it was one of the quickest decisions. Within 1 week, we had got all clearances of what we had recommended. So that is the kind of experience I have had with Amitabh. I remember as a young collector, and this was narrated to by the then Secretary Civil Aviation, that as a young collector of Cochin, Calicut, he went to meet the Civil Aviation Secretary of Government of India. And the Civil Aviation Secretary was very reluctant to give him the appointment because he was wondering what a collector has with Civil Aviation Secretary. I mean, they're completely unrelated. So as a young collector, dynamic collector, Amitabh entered into his room and the secretary had a lot of other things to do. So he asked him, yes, what is it? So Amitabh's opening sentence was, sir, I want to set up a new airport in Cochin. That is how the private participation, the government, the public-private participation of the Cochin airport started. And that is the kind of passion, that is the kind of positivity Amitabh has. Two hallmarks of his character, which I have seen over the years. What has impressed me the most, the two high points, the two hallmarks of his character, passion and positivity. The way he spoke now, it was full of passion. And that is the passion we see in his work also. And I'm not saying it just to please him because he is here before all of you. This is something which I have truly and sincerely and strongly felt over the years. His passion to deliver is unparalleled and it is infectious. Second thing is positivity. On every issue, he has a positive outlook, always keen to do certain things, always keen to deliver the results. So that is the kind of person that he is. So having said this much about the author, let me comment briefly on the book. I have had occasion to go through the book very briefly. He shared a copy with me a few days ago. And I would like to highlight four things. First, I think the book represents Amitabh's personal journey from Make in India to Made in India. The campaign of Make in India was launched, I think, sometime in 2014 end or 2015. He was again Secretary, Industrial Promotion and Policy. So that was Make in India, which was aspirational. It was an aspiration, it was something to be done. And today he is releasing a book called Made in India. That means that aspiration is now gaining traction. That aspiration is now becoming a reality. So I think it's reflective of his personal journey from, from an aspiration to something which is really happening today. And at a larger level, I think from Make in India to Made in India also represents the country's transition over the last several decades, or perhaps more than a century. Because he talks about deindustrialization, which happened in the pre-independence era during the colonial rule, how deindustrialization happened. He mentioned about India's GDP being 24-25% of the world GDP and how it shrunk. He has also talked of, the deindustrialization, or what has been described as, the drain of wealth from India as a part of colonial administration's strategic move, not only in India, but in Africa and wherever colonial rule existed. So in a sense, at a larger level, I think the book also represents a transition from colonial India, the starting up of private initiative even during the colonial India, and over the last 75 years after India became independent, how the process of industrialization has taken off. So it represents the transition of India at a larger scale. It represents his personal journey also. The second aspect I would like to, what impressed me most, again related to the first one, is that he has really captured India's growth story, the manufacturing sector, the service sector, the new business models, the startups, the payment ecosystem, and you name it. I think he has really captured the India's growth story in the last 7.5 decades. The third thing which comes out very clearly in the book, what he has described as the reigniting of reforms post 2014, where he was actively participating, and I also happened to be there. And it was from very close quarters that he has described how the whole process of transformation, how the whole process of economic reforms and the changes that we have had leading us to a situation where we have a direct benefit transfer facility, where other countries during the COVID were grappling with the problem of sending checks or how to transfer money to the people affected by COVID. Here in India, on a Sunday, Reserve Bank, we worked with the government and the Reserve Bank, we worked together, and on a Sunday, at the click of one button, money was transferred to 30 crore families. So the book, in a way, also represents post-2014, how the reforms have taken place, and he has written it out of his personal experience, and that is something which comes across quite impressively throughout the book. And the fourth aspect which he has highlighted and which he touched about is the role of the private sector. Now, it's the private sector which really has to drive growth, which has to drive investment, and which has to lead the way forward. Government has to provide an enabling ecosystem. Government has to carry out the required reforms in various sectors of the economy. That is the role of the government to play, the government to act as a facilitator and to provide an enabling environment where private sector can really play. And he has continuously throughout the book emphasized the role of private sector, and he has captured it. So the book has come across very well. It makes very interesting reading. Despite, I got it very recently, but still I have been able to go through it to a considerable extent. And so my congratulations to Amitabh from the depth of my heart for really capturing this entire story through his words. Having said that, before I conclude, if we are talking of Make in India, I think very briefly, I don't want to stand between this august panel which is gathered here and you, but very briefly I want to touch upon in terms when we are talking of Make in India, Made in India, Where are we today and where do we go from here? Going forward, what? What next? Where we stand today, the country's GDP is expected to have grown by 7% last year, 22-23. Current year, 23-24, we have given a projection of 6.5% from the RBI. And we are quite optimistic and fairly confident that the actual growth will be close to that. Although international agencies like the IMF have given lower projections, but we have sort of shared our thoughts with the IMF, and we are reasonably sort of optimistic and confident that the growth will be close to 6.5%. You look at the high frequency indicators. You ask Mr. Chandrasekharan, he will tell you what is the kind of sales growth that his company or the sectors in which they are present, how those sectors are growing. You ask any entrepreneur today in various sectors, the underlying, the growth momentum, the month-on-month growth. It's not just statistical that last year or year before last we had low growth. Yes, there is a statistical factor playing a role. I'm not denying that. There is a statistical element in that. But the momentum, month on month also we see good momentum, and in fact almost all the high frequency indicators are revealing that. Our analysis in the Reserve Bank shows that urban demand continues to be strong, rural demand has started picking up and will get further support from an excellent Rabi crop. The procurement by the government has already exceeded last year's procurement. Capital investment by the government's capex has been really very high over the last 2 years, and in the current year also the budget provision is very high. That will provide a lot of support to growth. Private investment also, there are clear indications that private investment is picking up in sectors like steel, cement, petrochemicals, and several other sectors. And current year, our projection of 6.5%, if it materializes, India would have contributed to world growth by about 15%. In other words, 15% of the world growth in the current financial year will come from India, and it's not a mean achievement. So these are the factors which give us the confidence that the India story, that the made in India, the make in India, all these are no more aspirations, but they can really materialize. Nearer home, as I was just leaving office a little while ago, the inflation numbers came out for the month of April. And it was very satisfying to note that the consumer price inflation, last month it was that is in the month of March, which really data was released in April, on April 12th. The consumer inflation, the headline inflation was 5.7%. And the inflation number for April, which was released today, 5:30 p.m. as I was just about to leave office, was 4.7%. So it gives me and my colleagues in the Reserve Bank to say with reasonable amount of confidence, in fact, I would say with good amount of confidence, that the monetary policy is on the right track. And our job in the Reserve Bank, I'll conclude with this, our job in the Reserve Bank is to provide a financial ecosystem, a financial sector ecosystem which will facilitate the aspirations of every citizen of this country, that India should grow fast, Indians should do well, the country should do well. So as a part of this exercise over the last few years, we have carried out significant reforms in the regulatory architecture of the financial sector, whether it is banks, whether it is non-bank finance companies, whether it is the cooperative banking sector, whether it is, you mention any sector of what constitutes the financial sector, we have carried out the required regulatory reforms. Supervision has been tightened. And over the years, despite COVID, despite the impact of the Ukraine war, one thing which we have ensured also, and some amount of luck has also helped us, is the stability of the Indian rupee. That is something which business, the private sector and the private investors, they need it. Unless your currency is stable, investors will not feel confident to invest, whether investors from India or foreign investors who are looking at India as an investment destination. In fact, the rupee is the least volatile currency if you compare Indian rupee with the currencies of our peer countries. It has been over the last 1 year, after the Ukraine war, in the last 1 year, it has been the least volatile currency. This year, from 1st January, the dollar has depreciated by about 1.5%. It varies from day to day, but roughly about 1.5%. The rupee has appreciated by about 0.9% or 1%. Now, I'm not saying appreciation is good. We have no belief. I mean, I'm not saying appreciation is good or depreciation is good, because that is reaching a value judgment, and an importer will say that appreciation is good and exporter will say that depreciation is good. So depending on where you stand, you look at things. But as the central bank, our effort has been to ensure that the volatility in the Indian currency is contained. We have also been looking at sunrise sectors, like, for example, the giving boost to the fintech sector, and we have laid down guidelines for digital lending, and we have also set up an innovation hub in Bangalore. I think going forward, to conclude, let me say that the Indian economy needs to continue with reforms, the reforms which have been initiated in the in the various sectors of the economy, not just in the financial sector, but in the other sectors. The reforms which have been initiated, they need to be continued. We need to focus more on technology, because access to technology, thanks to the fragmentation, the global fragmentation which has taken place, thanks to the kind of geopolitics that we are witnessing today, and perhaps which may continue even in the coming years. We need access to technology, which also necessitates that our expenditure on research and development has to increase, has to improve, not just the government, but also the private sector. And Indian business, Indian private enterprise have great opportunities. Foreign entrepreneurs and foreign enterprises which are looking at India as a destination also, I think it's definitely, India has been an attractive place. We have had good inflows of the forex in the current year, which we have been witnessing. So I personally feel that the release of a book like this at the current juncture is very timely. And let me conclude by once again congratulating my dear friend of 50 years. All the very best in whatever he does, and I wish the book all success. Thank you.
Governor, thank you so much. I'm actually tempted now, since you talked about inflation. I'm actually tempted to. I know, Mr. Kant is. I know you're not taking questions, but that's what I said. I'm tempted to ask you whether today's inflation print will change your stance from a hawkish pause to a dovish pause, Mr. Kant. And the other question I would have asked you, if you're please feel free to answer, is the 10-year bond yield below 7% at a fresh 13-month low, sir.
I'll move to the audience with just one sentence.
I'm trying my luck.
One sentence. 10 a.m. on 8th of June. You will know what the policy is.
Thank you very much. Ladies and gentlemen, the RBI Governor Shaktikanta Das.